Committee. First order of business is approve Jennifer Groves Allison on the phone. Can I have a motion? Betty, second. Brandy. Any questions? All those in favor? Aye. Any nays? Okay, moving on. Thank you. Approval of the minutes. I need a motion to get the May 23rd, 2023 minutes. Linda? Phil? Are there any corrections, additions? Okay, all those in favor? Aye. Any nays? Okay, moving on. We are at informational items, monthly financial report.
Hello. Hopefully I'm starting to look familiar to some of the new board members. My name is Julie Custrin. What we have before you is March, the financials for March. In an attempt to try and streamline our monthly financials, we have edited the memo version, which has greatly reduced the amount of time it takes us to put together, but I believe that there's some information that you guys may have had questions on as you reviewed March's financials. So I want to highlight a few of the items that I wanted to bring to your attention in case you had any questions. So first, I want to start on page 5, which is one of the newer tables and charts that we brought forward to you guys a month or two ago. And on the all funds, you'll notice that the property tax revenue is 0. Hopefully this is starting to become a repeated item, but as you know, the first installments of property taxes weren't due till June, so we will not see that. Okay. Next, for intergovernmental revenue, it shows that we are behind in this schedule. I want to highlight that one of the reasons is because ARPA is in there, and we have $23.75 million is the budget for ARPA, but we've only recorded $1.4 million year to date. So that is why we're below 25%. So nothing to be alarmed of. Moving on, we have charges for services, which are also below what we would expect for period 3. And there's a few factors that I'm going to bring before you. Nothing to be alarmed. The first is we have the employer and employee portion of the health insurance contributions. We have not recorded that yet to date. That will be forthcoming. That was just an item that we have to clean up after we switch to Munis. So we just have to have the time to do that, but that will be coming forth. Second is ETSB. We get revenues from the state, but they are usually about 3-4 months behind. Right now, we do not accrue those revenues. We just receive them as cash and then record the revenues at the year end for anything received the following year. I'm going to look at if there's a possibility of changing that so we have better financial data for you, but that is not in this statement. Next, we have in the same category that we get money as reimbursement from the state for engineering and construction. As you know, in March, we probably didn't have a lot of shovels to the ground for capital projects, so those are monies that have not yet been billed, but will be forthcoming. For all the accounts that were more fee-based, I did take a spreadsheet and kind of total what the budget was, and of those fee-based revenues that are in there, we are at 25%. So that is good to know. Next, moving on page 7. So now we're going to just talk about the general fund. So for the revenue for treasurer's report, for those of you new board members, we usually report all of those revenues, the majority of the revenues in period 13. A lot of that is information not available until later this year, and so we just recognize that then. So nothing to be alarmed. Election commission is another that is below, but that is because we usually get reimbursement after the election cycle. As you guys know, we don't have an election until April this year. And then the Regional Office of Education, we get a grant, and that's received twice a year, so we only get 50%. So nothing to be alarmed. For the expenditure side, you'll notice that the legislative department is over. That's because we have annual membership dues that are due earlier in the year, so that throws that off. And the ROE is using consulting services that were already about 60% through that project. I do not know the details of that, but that is the factual lines. Moving on to page 8. for the charges for services, specifically for the general fund. Part of the reason for that was because we had a temporary suspension on the municipal aggregation, which, as you may know, with mailings recently, that will be reinstated in July. So we should start receiving revenues for that. And again, the comments I had earlier about the treasurer revenue coming in period 13. So that's kind of what's behind some of those numbers being below. Again, nothing alarming for any of the revenues and expenses for general fund other than what I just highlighted. Next, moving on to the fund balance, the changes in fund balances. We have a resolution that will be presented a little bit later this meeting for the Long-Term Services Care Fund. So this will be a new fund starting, it was a new fund as of FY22, and it will be a new fund in FY23 being reported. So that is on there. And once the resolution is approved, the all the data and the budget will be moved over and will be reported in future years. So the Long Care Services Fund is what replaced the Headington Oaks Fund. So now that Headington Oaks is no longer operational, we sold the building, the debt is refunded. That is now a special revenue fund because the primary fund revenue for that fund is property tax. So that has to be restricted. Lastly, I did not have the time this morning to have a deep dive, but I did want to report to those who find enjoyment in reading the IML update. The July Revenue Review magazine was posted, and they do have in there the revenue estimates. So if you want to go through, we will take a look at those revenue estimates that they produce, plus our own internal analysis that will go into the FY24 budget. Just one highlight, I did, again, this is very high level, I didn't have a time to review, but from what I looked at, it looks like we will be on par for income tax, local use tax, and PPRT. One thing to know is that PPRT, they are estimating that will be lower, about 30% from FY22, and they'll continue to go down. A lot of that reason is how the state allocated revenues to us, and they essentially over-allocated, so they're gonna be taking those funds back. So the golden goose, though it was no golden goose, because there's no such thing, is officially gone. Those were the informational items that I had to highlight. I'm happy to answer any questions.
Any questions for Julie? Okay, thank you. Hey, Headington Oaks financial report.
Hello, everyone. Quick update on Headington Oaks. We have collected $18,150 in April. We are filing the Medicare cost report on July 3rd. It was originally supposed to be May 31st, but because this is our last one, they put the dates out from when we filed for this to be the last one. And so that's July 3rd. So I'm wrapping that up with RSM this week. And hopefully we'll be able to recoup some of those funds from them. We're working on the Medicaid. We've had some movement over the past few weeks with HFS and Molina. I'm now able to get into their billing system. I'm working with our consultant on getting everything rebilled for the Medicaid, and we can do those top two line items right away on the Medicaid part. So we'll do the Medicaid, and then we can bill for the Medicaid pending and see what comes from that. So we'll be working with them over the next few weeks on getting that done. And then in July, for July committee, we'll be bringing forward the first round of write-offs as we had talked about last month. So I kind of want to see how things shake out with the Medicare, and then, but we can do a lot of the other chunks in a phase one of write-offs. So Does anyone have any questions for me on that piece?
Any questions? No, thank you. Okay.
Okay.
We are now at May 2023 Accounts Payable Review.
You have the report in front of you. We didn't add anything new this month as we did last month, so if you have any questions on anything specific, I'm happy to answer those for you.
Anything specific to ask? No? Okay.
Okay,
Thanks.
thank you.
Okay, we're at legislative update.
Thank you, Madam Chair. As is called for in our contract for services with Anderson Legislative Consulting, we ask the team from Anderson to come by periodically to meet with the committee to give you an update on where things are at. Today we have Taylor Anderson from Anderson Legislative Consulting, and his purpose today is to share with you kind of an end of session report and to highlight some key pieces of legislation. So I'll turn it over to Taylor.
Thanks, Scott. Good afternoon, everyone. Thanks for having me. Appreciate being here. I'll be brief. Just kind of want to hit some of the highlights. This year was a kind of a return to normal for session since the pandemic and everything going on. This was kind of our first full year where the General Assembly was present the entire time in the building. There was probably just shy of 40 new members in the General Assembly, so it's a lot of new faces, a lot of new procedures. People were getting adjusted. There's about 6,800 and some odd bills introduced this year, 566 of which passed. Both chambers are made to governor's desk. They're in the process, the governor's office is in the process of reviewing those bills and signing them. They've already signed close to 100 bills, and we are anticipating that he'll probably sign the majority. This governor has been pretty consistent in the fact that he hasn't vetoed many bills over the course of his tenure, and so we are anticipating that close to that 566 number will ultimately become law. That said, those numbers are pretty average. It's the first year of a new General Assembly. We generally see about 6,000 bills introduced on those years. The second year of a General Assembly will see probably closer to 3,000. I will say, however, in the past 5 years, those numbers have started to trend upward. So we had 66,000 bills, or 6,600, 2 years ago, and we saw close to 4,300 bills introduced last year. And so we are anticipating those numbers to keep increasing. Many of those bills are shell bills, but shell bills are always the worst kind, in my opinion, because things can happen far more quickly with shell bills. On to the budget. This year, the state is anticipating collecting about $50.6 billion in revenue, and they're expending about $50.4 billion. Those numbers are kind of rounded. We're anticipating, or at least the governor's office has said they're anticipating a surplus of about $186 million. And so in their minds and in many minds, we're trending in the right direction as far as where we're at fiscally. Our rainy day fund for FY24 should crack $2 billion, which, I've been doing this for 15 plus years, and I can't think of a time when we had $2 billion sitting in a rainy day fund. So that's a pretty positive step. I know was mentioned earlier about a bump in LGDF and some of the changes in CPPRT. I'll talk about that real briefly. We are anticipating there to be about $112 million additional dollars distributed via the local government distributive fund. There is an $85 million increase. And then just from natural growth from income tax, we're going to see probably an additional 27, 29, something around there. So about $112 million extra dollars going out through local government distributive fund. Just as a brief reminder, currently local governments are only receiving about 6.5% of local government distributive fund. Traditionally, that number's been at 10%. That was a deal constructed in the 70s when the Constitution was changed, because local governments prior to that could have their own income tax. And so the give up, local governments gave up the ability to provide their own local income tax in exchange for receiving 10%. So we're not at that 10%. As I said, we're about 6.5 or so. The corporate's a little lower. Private income tax is a little higher. So it smooths out to around 6.5. We were successful this year with partnering with a lot of other local government entities, including IML, some of the suburban municipal conferences, as well as some of the statewide county organizations, and pushing for that increase. We went from about 6.2 to 6.5. So we still got a lot of work to go to try to restore to that traditional 10%. But we're kind of approaching it in baby steps. So hopefully this year, we'll have that additional $85 million, and then in subsequent years, we'll try to keep continuing pushing those dollars up. As was mentioned, however, the Department of Revenue kind of smooths out the figures between LGDF and the corporate personal property replacement tax. Partly that's due because of the formula for CPPRT that was done or created in the 70s, and also because corporate taxes are about a year behind. So a corporation pays their 2021 taxes in November of 2022. So it takes a little while for the Department of Revenue to kind of queue up and match up all those dollars and figures. So normally the Department of Revenue kind of has a break of about a percentage point between kind of what the anticipated the revenues being and what those revenues actually are. And so it's not a real issue when they have to true up those numbers at the end of the year for previous years. However, this year they're anticipating about a 5% and maybe even more difference between what they estimated for CPPRT and what was actually paid. So that means we're going to receive a little bit more money on the local government distribution fund, and then we're going to receive quite a bit less money on CPPRT. I had a conversation with the Department of Revenue. They're going to try to have all of those numbers available to local governments and send out letters to local governments by August, so that local governments have actual dollar figures so they can start doing the budgetary process. I think August is maybe a little optimistic. And so that's going to be something we're going to need to keep a close eye on. I know we'll continue to reach out to the Department of Revenue to try to encourage them to get those numbers out to people as quickly as possible. But I would really anticipate probably closer to October, maybe even into November before we get true numbers. And I know that's going to be tough to budget for. So I just wanted to give everyone a heads up with regards to that. Another big highlight of the budget was, for years, the township bridge programs, which counties do receive dollars from, had been stuck at $15 million. That had not been increased in 30 plus years. And working in conjunction with the County Engineers Association, we were able to move that figure from $15 to $60 million, so quite an increase in 1 year. What that will ultimately result, I think, Scott and I talked during session, I think that means Peoria is going to get about 900, just shy of $1 million in the Township Bridge Program. It won't be able to rebuild a bridge, unfortunately, because I think the cost for that are about $1.3 million to $1.5 million statewide, but it should allow for more repairs to be done on various bridges. So we're going to continue to fight for that. That's another priority of ours, just because of the number of bridges the state has, but also the number of bridges Peoria County has. Trying to get dollars out to make sure that our infrastructure, or aging infrastructure, is able to keep pace is going to be a priority. And so we were happy, however, to go from 15 to 60 million. So I spat a lot of numbers out. I'll pause briefly if there's any questions about kind of the budget and where we're at.
Any questions?
Okay.
Steve, hold on.
I'm going to talk about bills. Yeah. Okay. All right. Just as kind of reminder, so we're done with spring session. We'll go through the summer. Veto session is slated to start in October. It will be the kind of traditional 6 days. I think we've got 3 days towards the end of October and 3 days in the beginning of November. Right now, we are hearing that this is going to be quite a robust veto session. And that's also kind of been a trend. We've seen a lot of really big bills move through veto session. So it's not just spring session anymore. They're moving massive pieces of legislation through veto session as well. So just as a reminder that we're not done this year with bills being moved, we still have veto session as well. And because we're in the middle of a General Assembly year, we won't have a lame duck session like we did at the beginning of this year, but that's also started to become quite an opportune time for massive pieces of legislation to be moved. So with that, I'll just jump into a couple of bills I wanted to make sure I highlighted and talked about because they're new. A big change that we kind of spent a lot of time working with our local government partners on was Senate Bill 895. And this was brought about because of a situation in kind of the northwest part of the state where we had a municipality kind of improperly utilizing intergovernmental agreements. We know IGAs can be incredibly efficient and very cost effective for local governments to use. But there was a community that was kind of improperly utilizing this. They were going out, acting as a contractor to other units of local government and undercutting businesses from being able to bid on projects. Part of that is because obviously that, if you're a local government, you have your contract work, but you don't have to pay prevailing wage. And so there was a lot of issues with regards to that. And so what this bill sought to do, and again, we spent a lot of time working with the sponsors, the proponents, and other units of local government on this, is we kind of created guardrails around how intergovernmental agreements can operate. And essentially what this guardrail stipulates is that intergovernmental agreements are fine to be utilized. However, they're kind of now going to be location-based. So the county can partner with any local governments within the county. Local governments within a county can partner with other units of local government that they are adjacent to or bordering or touching. So we're not really interfering with that. The one thing I wanted to point out, and we worked with the county engineers on this, is that there was some concern because, again, this is geographic and county specific. This, as the bill was kind of amended, it would have prevented Peoria County from doing an IGA with, let's say, Tazewell County on a shared stretch of road. And so there was some concern there that that guardrail might have been too restrictive. And so we've allowed for counties to be able to partner as long as they're adjacent, they share a boundary, and they're jointly doing the work. So this would not allow for a County A to go out and essentially do the work on behalf of County B, but they can now partner together and jointly do the work. So again, I just point that out because I know this is going to be there's going to provide some changes to how IGAs are functioning, and we just want to make sure that people are aware of these new guardrails as they move forward. This bill will be signed likely this summer and go into effect. So just wanted to make sure people are aware of that. I won't go, in the interest of time, I won't go through all of the leave changes that were made, but there are a number of additional bills passed this year to grant additional leave provisions to employees for bereavement purposes, for, in the instance of an employee suffering the loss of a child, either via suicide or homicide. So there's a lot of different HR bills that are going to impact how your employees are able to utilize their leave. Most of them are paid leave, most of them are unpaid leave. For instance, the bill I mentioned where a child suffers, either a homicide or suicide, they have up to 12 weeks of unpaid leave, and they don't have to take that all in one single chunk. They can kind of split that up in a single calendar year. But I would just advise to have your HR department make sure that they are looking at how some of those changes are going to impact their benefit structures, their benefit packages, and how employees are going to be able to utilize leave. We want to make sure that you are aware of that so there's no gaps in coverage for your employees as these situations may arrive and occur. The next bill I want to talk about is Senate Bill 1463. This is a change to how juveniles receive fees and assessments. Essentially, this is going to stop assessments or collections being made of assessments on delinquent juvenile fees. So essentially, juveniles are going to be excluded from court fees and assessment system. There are still some cases where fines and fees can be assessed to juveniles, traffic violations, specific county and municipal ordinances, et cetera. But the vast majority they will be excluded from. And so obviously that's going to have an impact on the court system, the amount of fees they are collecting. I heard earlier that, I think the state's attorney was going to provide some statistics on the type of cases being heard and moving through the court system. That should be helpful and hopefully give you an idea of where there might be some losses and resources with a change like this coming into law. Again, this is, it's been probably 5 years ago since we saw the last kind of major court assessment change. This is another one, and it's aimed squarely at juveniles. But again, depending on how many juveniles go through your system, and I bring this up because I obviously know Peoria has a detention facility here. So that's just something to keep in mind as you're looking at kind of the cost of the court and where dollars are coming in and where dollars are going out. I want to mention also Senate Bill 2368. This was a statewide change to building code regulations. Illinois was one of the few states that does not have a statewide building code. And what that ultimately, and I found this out this year, what that ultimately meant for the state is that when we were applying for federal FEMA dollars, there is a checklist that FEMA goes through, and if you don't have a statewide building code, you can't qualify for the maximum dollars as if you did have a statewide building code. So this impacts us when there's natural disasters. And so this was worked on quite heavily this spring session, and it sets a statewide structural building code excuse me, for commercial and residential buildings. Now this may or may not impact you. I'm still going through and kind of looking at all the various different changes this will institute. I will say, however, that the key word here is structural. And there was a big concern that this was going to be, a statewide sprinkler code system, which could cost a lot of dollars or be quite a large change at the local level. And so what this ultimately means is you're going to have to, and let me back up. What this bill goes into effect January 1st of 2025. And what it says is the building codes, the national building codes are updated every 3 years. And a local government cannot be out of 3 cycles. So you're going to have to keep up with the last 9 years. So in 2025, you will have to, if you don't already, have to adopt the building codes from 2018. That does give us a little leadway. It's not the most recent, and so usually that will allow for local governments that aren't already adopting the most current code to have a little wiggle room and some leeway with regards to what they are adopting. But you will have to every 3 years or so make sure you're within that 9-year window of the new national current codes. Again, as I was saying, the key word here is structural, however. That's kind of what you need to look at. Anything that's non-structural at the local level, you're still going to be able to adopt your own specific ordinance. So, and you're going to have to do that proactively. It's not, you're going to have to, you're automatically forced to adopt all of the codes in that 9-year cycle, unless you specifically say, hey, you know what, we don't want to adopt a sprinkler code for our building code. and for our zoning. So it's a proactive requirement, and so this is going to take a little hand-holding, and I think, in 2025, there's a close look is going to need to be looked at this over the next couple of years to make sure you know exactly where you're at, and where you'd like to be after the effective date of this bill. I've talked to a number of counties throughout the state, another number of municipalities. Some have already adopted 2018's regulations, but they don't like how they have some of the wiring structured, and so they're going to have to go back and say we're going to keep our 2018 codes, but we're going to amend those codes so the wiring is how we like to do it in our village or in our county. And so I would suggest that Peoria make sure you guys take a look at that, see where you are currently and where you'd like to be after 2025. The next bill is it was an election omnibus bill. It's Senate Bill 2123. This did a bunch of things with vote by mail, registration, et cetera, et cetera. The one thing I do want to point out, however, is that this creates a task force to look at ranked choice voting. And this is kind of a new trend that's taking place, the conversation's taking place across the nation. I think only right now Alaska is the only state that does this, but a number of states and election bodies are looking at doing this. I think there was a municipality that just decided to do this very recently. If you're not familiar with ranked choice voting, I am by no means an expert, and so I'm not going to try to explain it. But essentially, it's not get to 50% winner takes all. This would allow for people to kind of, hey, I like this candidate, I'll rank them 1. I like this other candidate, I'll rank them 2. I like this candidate, I'll rank them 3. What that means is the software that you need in order to tabulate that is quite complex, and there's quite a financial cost to this. Scott and I, again, had some conversations when this bill was making its way through the General Assembly, and we didn't think, or at least at initial first blush, it didn't seem like the cost of Peoria was going to be very high. Off the top of my head, I think it was somewhere between $25,000 to $30,000. After that, I had a long, in-depth conversation with the Illinois State Board of Elections, who they themselves are getting more educated about ranked choice voting, and they disabused me of that kind of low estimate. They still think even if you have the best technology and the best machines, that it could still cost, a county or election commission upwards.
Left.
Upwards of, I'm sorry, I'll have to apologize for boring Jennifer later, but upwards of $100,000 to $300,000 depending on the county. So that's a huge cost, and it's something that I'm going to continue to have conversations with the State Board of Election on. But it's something that, as this national conversation and trend is happening, we want to make sure that if the state is going to impose this on us, that they're aware of the costs and are going to help us cover those costs. I'll wrap up again because I went a little longer than I anticipated. There's a couple bills I just wanted to touch on briefly. The first is House Bill 2539. This deals with county stipends. So these are the stipends for the other elected officials. Traditionally, the stipends are set by the state, they're paid by the state, and they're paid directly to the elected official. There has been some issues with that, and so the Department of Revenue made it one of their priority bills this year, and I was shocked that this was one of the Department of Revenue's priority bills, was to, instead of the Department of Revenue being responsible for, the W-2 and sending out, the FICO and doing all that paperwork, they'd like for the county board or the township board, as the case may be, to be the ones responsible for that. So we worked with the Department of Revenue and other stakeholders, county treasurers as well, to try to make this as seamless as possible. We'll see how seamless this ultimately is going to be, But I do think it will probably take a lot of burden off the Department of Revenue and hopefully clear up some of the confusion that can take place. So instead of the Department of Revenue sending those dollars directly to the elected officials, instead, the county treasurer is going to be required to set up a separate fund, and those dollars are going to go to that fund and then be paid out to the elected officials. So those stipends will come to you all, to the county treasurer, and then those funds will be let out. We have nothing else to do with them, but that's, you're going to be responsible for the W-2s and those type of things now instead of the state being responsible. I was very concerned that this was kind of a precursor to the stipends being pushed down to the local level. That doesn't seem to be the case yet. However, this is something I'm going to be very vigilant about, because there is a worry that this is kind of the first step to, well, now you guys are handling everything, why don't you just pay it out of GRF or something? So we want to make sure and watch that closely, because obviously that would be quite a financial impact. And then the last one I wanted to mention is the drone bill, and that's House Bill 3902. Prior to this year, law enforcement could not utilize drones to survey parades and different outdoor activities, whether they're concerts, festivals, et cetera, et cetera. After the Highland Park tragedy on July 4th, there was a push to allow for law enforcement to be able to utilize drones during parades, for festivals, et cetera. This does place a lot of guardrails on how and when and how long law enforcement can utilize those drones and retain footage from those drones. They cannot be used during protest, for example, and they cannot be used for a crime, essentially. They're only to be used to keep an eye out if there's a suspicions of that there might be violence or something of that nature. I bring this up, because this is quite a big change for how drones were able to be utilized for law enforcement, but also because I do think we're going to start seeing, and I did have some conversations with the Sheriff's Association, I do think we're going to start seeing law enforcement request either more drones or training for how to utilize drones, and there is going to be a cost for storing footage. If there's a parade and the sheriff has 3 drones up for 3 hours, that doubles or triples, the amount of footage that you might have for one event, and so there is going to be a cost to store, the footage for these things. I will say that, however, the footage can only be retained for a very short period of time relative to other, body cameras and things. And there was, and I forgot to mention, there was some additional dollars in this year's budget. I think it was $30 million for body cameras and other things. And so one of the things we're also working with the General Assembly on is to increase the amount of dollars going to local governments to help with body cameras, purchasing body cameras, but also the footage for storage. And so this kind of just ties into that as well. But it is going to be quite a change, and I do think we're going to see law enforcement respond accordingly. And so you might start seeing that in line items from the sheriffs. So with that, I will conclude my bill summaries, and I just want to appreciate you all having me. I've represented the County of Peoria for 15 years, and it's been an honor and privilege to do so. Our firm has done so for almost 30 years. This is a great county. I love working with you guys. I'm happy to see some familiar faces over here and happy to see some new ones. So unless there's any questions, I'm done.
Taylor, thank you. Are there any questions for Taylor? No. Thank you for that report.
Thank you.
Next will be external audit update.
Hi, everyone. So in July, Brian Lefevre, our partner with Stickich, our external auditing firm, will be at the July committee meeting to give you an in-depth report on our audit for fiscal '22. The American Institute of Certified Public Accountants has a new standard in place, and so we're required to share a letter ahead of time from our auditor, just letting you know about their findings they had, or comments that they had during the audit, not just after the audit. So that's what this attached letter is. There wasn't anything that we weren't anticipating that they noted. Basically, the segregation of duties in our Penimation, because we used Penimation all fiscal '22. So that's been corrected for fiscal '23 with the implementation of Munis. And then they just have pointing out that we have to follow the GASB 87 for leases, which goes into effect in fiscal '23. So one more point on the audit. You'll see in the agenda briefing, audits are due June 30th of the calendar year. We have asked for a short extension. We're probably going to have it submitted next week. It's not a big deal to have an extension request. We just want to make sure the second partner that did the review had some clarifying questions that we met with them earlier today to go through. And so we just have a little bit of cleanup to do and how they're presented, and we wanted to give ourselves enough buffer to have the audit presented cleanly. So we'll probably have that submitted next week or the week after. So I just want to update you on that piece. Do you have any questions?
Any questions? Okay.
Thank you.
Okay, we are at joint resolutions. Peoria County Parking Deck PARCS system replacement. This is joint with Infrastructure Committee. Can I have a motion to get this on the floor, please? Eden, the second. Brandy? Okay.
Good
Mark?
afternoon.
Hi.
This is coming before you today because this was not included in the 2023 budget, so we need to pull the money for this project from the parking deck fund balance. This is the current parking system that we use to run the parking deck that Heartland Parking manages. We've been notified by the vendor that they're going to sunset and stop support of that system at the end of this year. That system is required to run both the back-end processing of the parking deck and the day-to-day operations of the parking deck. Heartland Parking has managed our deck since the deck was open. They also manage the 3 city decks. The city is also going through the same process. We all have to replace it. So the recommendation that they brought forward for both us and the city, it's got to be the same system they run across the board in all the decks they manage. And as I mentioned yesterday, that includes the new OSF corporate office, third deck down behind there. It already has this system installed. All has to be standard and run the same. So this coming before you today is an approval to issue a PO to them for the purchasing of the new equipment before the end of the year, before it gets sunsetted. So that's it in a nutshell. Any questions?
Any questions?
Yes. No, because it is no longer PCI compliant, which you have to be PCI compliant to process credit card interchanges. That old system is no longer compliant and does not have the capability to be upgraded to become compliant. They're going to see if they can do anything with it. I don't think there's anything because it doesn't meet compliancy laws, which means you can't process credit cards through it anymore. New system is more of a modular system, so when PCI changes are made, we can pop the credit card piece out, we can make changes on it's much better when changes come about. The old system, both ran by us and the city, was not, and that's unfortunate. But there's nothing we can do about it. We've got to have that to run the deck, so. It was put in 2019, not very long ago, which is the unfortunate. Both us and the city both did them at the same time, so. But I feel the new one is some of the data that came out, and the new one's from a much larger company, a worldwide company that services 7.5 million cars in parking decks a day through their system. So, yeah, they're pretty much the standard across the world that's used, so. Okay.
Steve?
I just want to make sure, and I think you said this estimate is for the hardware, but I want to make sure it's installation,
Everything.
commissioning, training, whatever is
Yep.
needed to be done. And
Yep.
then, is there a annual maintenance fee for the software, the
do.
system that?
We do. We pay that, and this new one will be about $1,000 less than we're paying on the old one. And this does include removal of the old system, installation of the new system, modification. I don't know if you see where you leave the upper deck where the current one is. That's all got to be modified. All the arms have to be. It includes everything. We don't have to deal with it at all. It includes training. The big part of this is we got to switch out parking cards, which is a challenge. Heartland will handle all of that for us also. So it's on them to perform everything it takes to bring this up. So nothing on our end.
All right. Any other? Okay. All those in favor, please say aye. Aye. Are there any nays? Okay, thank you.
Thank you.
Moving on to our second joint resolution, we have the 2023 Risk Management Fund, joint with County Operations Committee. Oh, I'm sorry. I was flipping to the page. Steve, you first, second. Betty? Okay.
All right, welcome. For those of you who've heard me before, I hope to not bore you again. As some of you may remember, in FY21, we hired Bellwether to come and do an analysis of the risk management fund. With that analysis, we changed from where we would transfer money in and out of the risk management for how that risk management function is used, and we switched to just levying the money directly. So the fund is now supported solely by property tax dollars. So because of that, that is no longer an internal service fund, so it's no longer qualified as internal service, meaning different funds support it. And so now because of that, we are now doing it as a special revenue fund as of FY22. This usually would mean nothing for the board because, it's all reported in the financial statements and the budget. But because of the new financial software system, when we were advised, way back when, we were advised to do a fund structure in which the beginning digit meant which fund type it was. So we're moving from one fund type to fund type 2. So that means we have to have a new fund number, which means that we need to request from this committee the reappropriation of the funds that were budgeted to the risk management fund and put them into the new fund, and then we'll then transfer all the activity. So nothing other than the fund number really changes, but we do have to have that motion to actually get those budget dollars moved over. Happy to answer any questions.
Any questions? Okay. All those in favor? Aye. Are there any nays? Okay. Moving on, we are at resolutions. FY, boy, my eyesight's terrible. FY 2022 appropriation of general fund surplus reserves to capital projects. Can I get a motion on the floor, please? Eden and Linda? Okay, yeah,
So, Madam Chair, Heather's going to take this item.
okay.
Thank you. I feel like a yo-yo coming back and forth, but here I am. Okay, so at the close of fiscal 22, the general fund had a surplus of about $2.8 million in it. It's well above the policy reserve rate. It's noted in your agenda briefing. Since then, we have approved a resolution, as you are well aware, of $500,000 for the new Health and Human Services campus. And then what was approved earlier in the Public Safety Committee meeting, about $62,000 for the state's attorney's collections fund that was, legislation was passed in fiscal 20, but we weren't aware of it until recently when the state's attorney's office made us aware of it, so that we are reallocating those funds into a different account specifically for them. And so the remaining reserves are about $2.3 million. And we had discussed with Administrator Sorrell some different options, and where we've landed is using $2 million of those funds to go toward capital projects for the remainder of the year. We're all aware that projects that we have budgeted are coming in at higher than cost. So this would take care of covering those expenses, as well as any other projects that we would like to get done in fiscal '23. If anybody has any questions, I'm happy to answer.
Any questions? Scott, do you want to add anything?
Madam Chair, the only thing that I would add is, I think this is a little bit of a departure from past practice in that we typically would have a surplus in the general fund, just revert to the reserves and continue to build up that balance. But in light of the very prescient conversations that the Infrastructure Committee has had and the full board has had related to capital improvements, we felt that this was a good tactic to take at this point in time, given the health of the general fund reserves. Additionally, just to call it, as we kind of brainstormed what the recommendation might be, we did want to share with you that we did evaluate an option that, had we been allowed to, would have included a recommendation to eliminate the one and only outstanding debt certificate that we have. We have two bonds, the museum bonds and the nursing home bonds, and then we have one set of debt certificates that was for the Wilhelm Road Bridge. That would have, over the remaining life of those debt certificates, would have saved the general fund a little over $200,000 in interest. We've looked at to see if we were able to actually do that. We are at this time and until 2028, when they're callable, we've got to continue to make our annual payments on those debt certificates. So we did try to eliminate some debt for us, but that was not possible and won't be possible until 2028 when they're callable.
Any questions? Okay. All those in favor? Aye. Any nays? Okay, thank you. Moving on, we are at the 2023 Long-Term Care Services Fund. Motion, please. Phil, second. Danny, Phelan? Okay.
All right, I'm before you again. This is very similar to the risk management fund, pretty much identical. It's just a different fund. As you guys remember, the Headington Oaks facility closed in in 2020, and then the voters approved to sell the building. And then the building was sold last August. Shortly after the building was sold, we refunded the debt. So now with the audit financial statements that will be reported next month, the Headington Oaks Fund was closed, and now that debt that used to be reported at the Headington Oaks level is now at a government-wide. So it looks at the county as a whole, because the enterprise fund is no longer existent because we don't have any residents. So it's no longer a fee-based fund. So because it's not fee-based and now it is supported primarily by property taxes, it will now be a special revenue fund. So, like we did with the risk management, we need to unappropriate funds from Fund 6690 and appropriate funds to the new fund. So that is what you have before you. If you have any questions, I'm happy to answer.
Any questions? Okay. All those in favor? Aye. Any nays? Okay. Thank you, Julie. Okay, committee action, review of executive session minutes.
Ready for me?
Yep.
Okay. It's a recommendation of the state's attorney's office that all previously held minutes continue to be held because the need for confidentiality still exists, and to destroy your executive session minutes that are older than 2 years, except for the ones that relate to pending litigation.
Okay. Can I get a motion to approve that? Brandy, second by Camille. Are there any questions? Okay, all those in favor? Aye. Any nays? Okay, thank you. We are at public comment. Do we have any public comment? Miscellaneous? Okay, then we'll be adjourned. Thank you. It was mentioned in the resolution that it's going to